All right. Good afternoon, peoples. I'm covering Rex, Bruce with Targeted Wealth Creation. Let's jump into the two longer term funds. Well, FEPI being the longest, API is a little newer, and the brand new payer is CEPI. So let's go through these quickly. So you see on 128 declaration for FEPI, it's paying $1.04. They had been paying around averaging around $1.08, $1.09. Um, and you see the annualized yield is right in that 25% range. The real question you have to ask yourself on these is how well is the underlying market, obviously. So I'll go into total return after I go through the payment. So you see the launch date. This is the grandmother of the funds. It had a launch price of 51.69 back on 10/11. So that's held up pretty well over that length of time. Okay, having been 49.3 on the 27th, the day before the declaration. All right. So again, pretty consistent. You see what you get for income. You really just have to worry about is your directional ideas to be in this fund. You look at app. Okay, so as a reminder, it's FANG innovation, right? So we know where it's targeting its sources. And if you remember, I go through what the holdings are. I'll just do a quick summary on that in case somebody is new. And then let me go through and give you what they paid, and then I'll go through the summary for those that care. You're going to care about CEPI. So on API, which is S&P 500 oriented, it paid $1.44. So a little bit more, not a little bit, a fairly substantial more, almost 50% more. And its annualized yield has always been in the 30s with the exception here, but there looked like there were two payments. I think what these guys do, and I see it going forward, is at the end of a 6 month period, so every 6 months, they pay out twice. So you'll see that in a couple of instances when, like with CEPI, I went ahead and projected out, and you'll see it. I may not. Oh, here we go, 1124 and 1125. So you can expect one of them to be bigger and then the other one to be smaller. Okay. So I'll give you more clarity on that when we get closer to it, but it has happened in the past. Okay. And we'll go through that. So remember I was telling you a little bit about what they do. So let's look at, so $1.44, 35.38 yield. Okay, what do I do in the green and red? I've been doing that consistently. So whatever the payment, if it's weekly, I track it. If it's a monthly payer like these, I just say, how did the fund do on the day before declaration? I compare that price every month or every week, depending on the fund. Is it going up or down? Up is green, down is red. If it happens to be the same, I make it white. Okay. And then here's API, right? So both over the last 2 months have headed down. You see it in this one, and you see it in the S&P 500 oriented one. Okay, so let's go to CEPI. So CEPI is crypto related. There's some payers in there. There's MasterCard and Visa, but in general, Bitcoin mining, all the candidates that play around crypto. So we had a nice payment of $1.70, considering this is 46.75. But look, this thing just launched on 12/4/24 at 51. So that's a fairly big drop quickly, even though it's a nice payer with a 43.63% yield. I should make this a little bigger. There we go. All right, and then you see all the future distribution dates. All right, so what do you care about? Let me do the summary and then let me tell you what they own. Okay, so I put this together. This is another thing that I do consistently across the board here to try to keep you in the game for how's it tracking, right? Because a lot of people chase yield. They go, oh, well, and let me point out another stat that you're going to be aware of, dividend return. Well, why is this 3.32? Because it paid a big amount. Well, that's how much money is it collected over time. Well, as time goes and it keeps paying, it goes up. Like this guy has been paying for 429 days, but I annualize that. I shrink down that to 365, right? And this guy's only 239, so I increase it up to 365. So then you get a dividend annualized rate. And I do the same for the gain or loss. So let's go over here and talk about that. I know 1,000, I just picked a number. But this thing had an inception way back in November of 2023. It was $54. So 49.30, that's a gain loss of 870, right? But since it's 429 days and not 365, in a year, it would only lose 7% NAV, okay? And the annualized yield over the 429 days is 31.23%, right? It's paid $16.87 in total dividend. So therefore, your annualized on is a 26 is healthy, right? But it brings it back into still being healthy, just not as healthy. Okay, when we look at total return being the 1917. So the AI equity premium API has been outperforming again over a shorter period of time. All right. So its loss is smaller. Its inception price back on June 4th was 50.67. Again, sometimes this leads into timing. Sometimes when you compare 6 months to a year, maybe it was very bearish when that kicked off, and so everything was low. So you always try to have to look at it. And the main thing in investing in these kind of things, do you like the underlying assets? You know, I may say, hey, I'm going to jump in CEPI and I'm going to hold it for 4 to 6 months because I believe crypto is going to stay high. But after that, it may not. So, you know, I hate to say it, but you do need to time and trade these things or DCA in if you're a long-term investor. You say, hey, I want to be in the market for 15 more years and I want to get income. All right. Well, first off, I'd say be careful of the tight sectors. I'd go more with an S&P 500 and I would just DCA in. You know, don't chase it up at the top. When you see it drop and there's fear in the streets and blood in the streets, as they say, buy more, right? So you got all kinds of strategies and thinking that you need to do. The marketplace is set up to take your money if you're just doing things a certain way. All right. Don't always chase momentum. Understand if that momentum is good for a while. And I know that's harder. You know, there's no set things. All right. So let's go back and look just as a quick. So this is your overall scenario. So what's wrong with CEPI? Well, the problem is, again, is this done now? It got hit, right? It came out at 51.13 on 12.4. It's 46.75. So that knocks it down quite a bit. And naturally, dividend isn't fair at this point. Now, if you want to project out 6 months at $1.70, it is the highest payer, right? Go look at the sheet. It's paying 43% on an annualized yield by paying $1.70 on a 46.75 price. But again, if you bought it at launch, you know, you're down. And again, you only take that loss when you sell, but you have to account for it. That's how accounting works, right? They'll go in and say, what are your total assets? What are your liabilities? You know, companies do this all the time. What are you worth, right? So you can't ignore. I know guys that chase income say, oh, I don't care about the NAV. Well, you should care about the NAV, right? Your margin, all, especially these guys that chase the big payers and they're on margin, you get a wake up call. Look what Schwab did last Friday. They went from 50% margin on Coney and Misty, and I imagine others, those are two of the bigger payers, right? To 100%. I have friends and people that I've worked with that got hits. I don't currently own those right now. They're great yield payers, but I wasn't in them near this top. I want to wait and see if we're going to go 128, 135,000 on Bitcoin, and we're going to find out. I mean, we could just as easily visit 93. So we're in the upper tier in the 100 range, but I need to see it break out of 108 if it's going to go on to 128, 135 before you get another big retrace. Or is this the retrace right now that takes us back to the 80s, 80,000? I don't know, right? It's a volatile asset. I track it and I try and watch and I get short-term momentum, but I don't always know. I don't think anyone knows. All right, so real quick. So on FEPI, this is, from a month ago. I didn't check to see if it changed, but they added Palantir, which I love. Anybody that's followed my channel knows that I love that. They own some Netflix, some Apple, Intel. I am not into Intel at all. They've been failing miserably. Tesla, I love. Micron, good company. Salesforce, Microsoft, AMD, Adobe, a lot of tech stuff, frankly, right? NVIDIA, Alphabet, Broadcom, and you see the weightings. What I did with the red and green is, and this is again back 30 days ago, is it going up or going down? So if I see Netflix at 654 and next time I see them at 620, I'm going to code the 620 in red. But if they're increasing their position, I make it green, right? So fair enough. And then they write covered calls in here, obviously, to generate the income. So let's take a quick look at API, okay? Love their Palantir position, although, and that's a big weighting in Palantir, but love that. But they're down a little bit, right, from the previous period. Again, I didn't update this because I focused on CEPI. I will. CrowdStrike, love CrowdStrike. They're the granddaddy and the big dog in security. NVIDIA, ARM, right? SMCI, well, of course, that's not the greatest with their accounting issues. Datadog, Salesforce, ServiceNow, Cadence, IBM. You see the list. Palo Alto Networks, so forth. Good companies, solid, good companies. All right, let's look at CEPI. This is a new guy, right? I need to put these a little bit. So shares held. They are buying the shares and they're writing covered calls. Okay. The weighting is what should tell you how. So cash, they're still in a big cash position. Robinhood. Okay. NU Holdings, I did some research on that, guys. So NU Holdings, let me read you, is a digital banking platform that utilizes proprietary technology and data to develop innovative financial products and investment services. The company's main offerings include digital accounts, credit cards, loans, corporate accounts, and new bank app. New bank's products and services are designed to serve individual consumers and SMEs, small medium enterprises. The company operates on a customer-centric model. They're located out of Brazil. There's been some talk that they might relocate to the UK. But, you know, albeit so financial oriented, right? Look at this: Visa, MasterCard. But then you jump into Coinbase, MicroStrategy, Micron, Tesla, PayPal, CleanSpark, digital, clean energy with a focus on Bitcoin mining, Marathon, same thing, Riot, same thing. The goat of semiconductors, Taiwan Semi. Okay, AMD, another fabulous company. IK Broker, right? Interactive Brokers, good brokerage. Nvidia, Iron, Block, right? Payment systems, Rambus. So Core Scientific. So and you see we're getting down in the holdings percentage, right? And then they get to Bit Digital, which is a digital marketplace, and then you see their little tiny holdings within that. But Bit Digital is only a 0.91. um, Fiserv, another financial, right? So anyway, guys, that's what I've got for you on this. Hope you enjoy it. Rex is a solid company. They're consistent. Just try to understand a little bit about what you're bullish on and own that. Don't chase yield, but, obviously, if two companies own the same thing, I see this all the time. For you guys that watch my Curve versus Yomax, they both have. Yomax has a ton of single stocks in the 30s, right? ETFs, income fund, and they have some new good lethargy and GPTY and LFGY. I just did a video on that. I like where they are. They have some similar stuff here. They're targeting owning it, not just, the covered calls where they're not really covered calls and you can lose on them when they overrun them. But why is this minus 34? Because it hasn't had a chance to build up its payments and it took an 8% here and projected it out. Okay. Although I do give it the credit of 2167 projected out on the payments, all right, but that's probably going to be in the 40s, and this is probably going to drop if it gets stable, and this could be a real winner. I mean, anytime you see this big drop, maybe that's the time to add some to go in versus those that bought in the beginning. All right, guys, that's what I got for you. I think it's so. Anyway, what I was saying is when I do like a Curve versus Yomax always pays 1.5 to 2 times what Curve does. But sometimes they'll have a 30% NAV reduction and Curve will be 2%, right? So if you like your stocks being steady, Curve is a better bet. And Curve almost wins in total return, like 5 out of the 6 funds. But I will say, in some fairness, that Yomax is the GOAT in the sense that people are going in. They're innovative. They got all these funds, right? Maybe that's to their detriment. I used to hate it when they say they're actively managed, and I didn't like some of their active management. But so be it. I can't disrespect them on coming out and being innovative with a lot of funds. And Curve's small, right? If you want to then write options on top of your fund, there's just not enough volume. Their AUM, assets under management, is very small. But I've interviewed the CEO of Curve, solid guy. They come from a solid background. I wish them luck, and I hope that they win more customers. So people should be aware and should look at them. All right, guys. Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Have a great one, people. Talk to you. Bye for now.